Hello guys, welcome to the Trading Parrot. In this video, I'm going to do an in-depth analysis of the price action on Bitcoin, including liquidation levels, on-chain data, and every single thing that matters. By the end of the video, we're going to cover the typical order book surgery to see and sniff around what's going on and answer one of the most common questions that you guys want to know. Are we going to bounce from here, get some sort of dead cat bounce? If we do, how is it going to look like? How high can we get? And after seeing rejections, what are the next levels to the downside that are high likely to get taken after seeing all the weakness on the general markets? Make sure you get yourself a cup of coffee. This video is going to be packed with alpha and information that you want to take with you for the rest of the week, whether you are a trader or investor. Guys, if you like this type of content, make sure that you're subscribed to the channel, hit the notification bell to get notified every time I put out one of these videos. Let's see if in this video we can get to 1,000 likes. That of course is going to send a strong message to the YouTube algorithm that this content is worth watching. Alright, you know what I like to start with, and it's usually to see what is the effect of the price action of these strong moves when it comes to the socials. And as you can see, the recent lows went to around 22. That was between the 16th to the 22nd of February. At that point, the price was higher. With the collapse of the price into the end of March, that has almost doubled to around 36. And at the moment, it's at 30 in a process of potentially putting a higher low. The reason I care about this potentially breaking out and continuing to the upside is because typically when the price is collapsing, that additional interest that brings is both coming from the panic sellers that start searching what the hell is going on. That can happen to have an effect of additional selling pressure, but eventually that divergence with the price going lower and the attention going higher can have also the effect of creating a bottom. And I'm not saying it's going to be perfect by the dollar, but it tends to increase step by step until eventually price cannot go beyond. So to me, that is already an alpha that we can take away as long as we understand the actual expectations. They need to be realistic. When it comes to the economic calendar, we have a bunch of things coming on. Starting with tomorrow, I will say the jobs opening is the counterpart to the jobless claims. And of course, anything that is going wrong in that direction, as long as it is within the sweet spot, it could be something that can at least give the idea to investors that we could have higher chances for rate cuts. At the moment, the next meeting is only showing a 3% chances of ease. No change seems to be the highest one with 97%. On Wednesday, we also have core inflation rate, which is expected to reduce both month on month and year on year. We have PPI and some other meetings as well during the week. There's a bunch of stories currently on the news. The ones that are attracting my interest are Michael Saylor pushing the US government for purchase of 25% of Bitcoin supply. I'm not sure if at the moment he's doing this because he's excited and wants to share his happiness, or if he's having a panic attack and trying to get just someone to buy the bag. Only 4% of the world's population holds Bitcoin. I'm also interested in this article, biggest red weekly candle ever, 5 things to know in Bitcoin's week, which I found very interesting. I'm going to show a few things that are the biggest highlights. Traders and analysts agree that little stands in the way of a 78 retest as BTC seals its worst ever weekly candle. CPI and PPI are due as market enters a broad risk-off phase and stocks futures tumble. The sentiment is definitely on the floor at the moment. The exponential chart shows that the current price of Bitcoin is right at the support of the exponential line. People are eyeing the liquidations at 77. The problem I'm starting to have with that level is how popular it's becoming thanks to the CME, thanks to the liquidation levels, and influencers all over the place talking about it. And thanks to that, some of them are starting to shift their targets to way lower prices. Some people are talking about 60s. The fear and greed index is still in the very low levels. Indeed, it's as low as GFC and COVID crash. On those opportunities, price soared right after that. People are also talking about the whales waking up. We're going to look at our own view of that and see if there's a confluence of indicators showing the same. They're using a website called Sentiment. Whales and sharks accumulating once again, collectively adding around 5,000 Bitcoin in the past 6 days. I've seen some inflows for way more than that, so I wouldn't get that excited just with 5,000 Bitcoin, to be honest. Here is another interesting alpha that I don't want you to miss, because although you can see that the liquidity is not necessarily increasing now on crypto space, as you can see in here, it peaked for a second time on 17th of February after the highest peak on the 9th of December. But since then, it has reduced significantly now in March, as low as the inflows that we had around September last year. But on the opposite side, M2 is doing precisely what we want. We talk about this bottom information and we were hoping for a double bottom from around here. We said we have a higher low. Then we started having one more candle, and every single week we've been following this with the first breakout, with the second neckline, and even we place targets towards having a higher high. If you've been watching the channel, you know we've been comparing those double bottoms with every single one in here. And the main difference of this double bottom versus this one that was a fake out is that this couldn't take the high. Today we can say that we have taken the high and global liquidity is increasing at a fast pace. Now we are no longer looking for a double bottom. Indeed, the double bottom has already played out. So if we continue in this direction, which I suspect the reason is because things are not doing great in the global economy, so they are having to do this. They are forced to print money to keep things going. And that can be initially quite scary because Bitcoin can collapse. For example, in 2020, in March, Bitcoin collapsed to around $4,000, and that was extremely scary. But you can tell that once the liquidity in April put a new higher high, it continued going up, and that's definitely the main responsible factor to get a strong leg up in the rally. If you don't have liquidity, that's just impossible. So this liquidity going up won't necessarily have an immediate effect. Some people talk about 1 month delay, 2 month delay, and even some people 3 month delay. But regardless of that, it is good to know at least that liquidity it's on its way and it has produced a higher high, therefore confirming a potential beginning of an uptrend in liquidity. If that continues, and if we get as well on the Federal Reserve a new print higher from here, then we get two factors that have huge significance for Bitcoin to recover. And this is not to tell you, hey, right here is the bottom of Bitcoin, but is to tell you that in a topping year with liquidity coming in, if we get that to come fast and strong enough, that can have the effect of putting a new high. That chance is not necessarily fully gone, in my opinion. For that to be fully gone, then we need the liquidity from here to completely fake out and even take the lows from here. Remember that this spike in liquidity was responsible for getting us out of the megaphone pattern last time. So right now, what we have done so far is not very far from that new injection of liquidity. We could say that so far we have like an 80% of the liquidity that they injected in June. And if you remember right, in August, we still were testing the very lows at 49K, 50K, and then just an additional 20% extra of liquidity in here in September helped Bitcoin to get out in October. So don't underestimate this alpha. No alpha is guaranteed. Neither they need to play in a similar way with a similar timing. It can always rhyme, and it's always good to be aware those things are going on in the background. Open interest has flashed again, but now it hasn't managed to take the lows of 24 billion. I'm expecting that if we go for the 78 or beyond that level, the open interest should flash all the way to 21 billion, which was the previous level of resistance. And this TA I'm doing on the open interest could potentially play out before the price does it. So you could have the price pushing up and the open interest coming down just because we are with the price liquidating shorts, and that is also a way to reduce open interest. And thanks to that, the open interest could land first in here and the price after. At that point, longs could enter very strong, creating tons of long positions, and if that play out, the open interest could bounce from here as well before the price does again. And that is one way of explaining why I pay so much attention to the aggregated open interest. You can see that March is now in the red, just like February, potentially playing out in a similar way to other previous Februaries that were also in the red, and they ended up with a March also in the red. I don't see this as a strong alpha. It could be a coincidence, but you don't have many Februaries in the red, so I think it's worth mentioning. This one is also very important. Today I made some findings. I was playing with the hash rate and with the price action. You can see I added some simple moving averages. This is the chart of the hash ribbons. We are tracking that capitulation event that we had on the 4th of February. It's been longer than a month since that. We also have the recovery signal on the 7th of February, and I want to catch up with what's going on with this. And the news is that I figure after reading the code of the hash ribbons, which by the way is open source and is free to anybody, you can also read the code if that is also your thing. And I understood pretty much the high level of how it works. And I did that because I want to start anticipating with better accuracy when could we be getting that buy signal. A buy signal on the hash ribbons is a big deal, guys. It's got 100% performance to call entries. There's been a handful of signals that took longer than expected, maybe with a drawdown larger than expected, but all of them ended up going to the upside. This indicator tracks the hash rate of the Bitcoin network together with the price action. And now that I look into the code, I know perfectly how it works. On the hash rate, which is this oscillator in here that you can see, I have two SMAs. One is a 30 moving average SMA, and the second one is a slow 60 moving average, both on the daily. The green is the fast, the red is the slow. And you can see that after I added this, it made it look just the same as the hash ribbons on the top end in here. Of course, this was done manually. The other one is the official indicator with the code I just showed you. On the top end, on the price, we also see on the daily time frame two SMAs. A fast is with the 10-day and the slow is with the 20. And as you can see, the last bullish cross that we had was on the 17th of January. We haven't had any bullish cross since then. This was a bearish one, and we were very close at 96.5 to produce a bullish cross. If they crossed there, we will have seen a buy signal from the hash ribbons, but we didn't. That is because the price went down 20% from there around the end of February. So when do we get that buy signal? We get that buy signal when the hash rate starts go up. We already have a bullish cross on the moving averages of the hash rate. That was the recovery signal. So all that is left right now to get that buy signal is if we get a bullish cross on the price. Remember that these are 10 and 20, so they move very fast relative to the ones that you have in here. The problem is that the moving averages on the hash rate are very close, as you can see in here, to produce a new capitulation. I will say if the hash rate tomorrow pushes back up, the white line in here, we could dodge that bearish cross, which could produce a new capitulation. For the buy signal, what needs to happen is that we get a bullish cross on the price, and that recently we must have had as well a recovery signal. If those two things happen, then we can get the buy signal. But what will be really disappointing is that the price starts coming up and we get a bullish cross in here on the price, but we get a bearish cross on the hash rate producing a capitulation signal, because I believe what we need is to have the recovery signal to have happened very recently and not a new capitulation one which will invalidate the buy signal, if that makes sense. So let's continue monitoring this very closely. and I'm gonna share another one. If you watch my video from last week, it's called Bitcoin Cycle Top and Bear Market Bottom Revealed. It's got 6,000 views. You should definitely watch that video to understand the next part of this video. As you can see, the Fibonacci MA indicator is what I'm showing you in here. It uses moving averages, logarithmic scale, and Fibonacci levels. Fibonacci levels are these ones, and as you can see, I have changed the level 6 to 0.75. And why did I do that? Because I wanted this green line, which is now the 0.75, I wanted it to match the bottom of COVID, the bottom of 2021 before the all-time high, and then also the support before the last dead cat bounce into 48K. So this is 1, 2, 3 level that if I put everything in default, you're gonna see that we don't have any support there. We only have the last line in the sand, which is just to test the bottom of bear markets. So I took the indicator and changed this level 8 and I made it 0.75. And now we have a support for 2021 bull market that was the last line in the sand before entering a bear market. And we're gonna take that line and we're gonna observe it and see where is it located right now and how we already test that. Well, we touch it at the bottom of the bear market when we pinch 15K. And then we were very close to touch it here when we went to 49K. At that point, it was priced at 48. At the moment, it's at 63K, and it's more or less, if I put a horizontal line, it's more or less the point of control of all this bull flag in there. So if we were to touch that line, it wouldn't be really great because ideally I want the top in here, the 73.5, to be our last line of support there without necessarily having to go that low into the previous range. But if we have to, you can tell that in the previous cycle, that is what we did. We have a 55 correction in the middle of the topping year. If we did such a thing, that will be a 43% correction from the top. So you cannot even complain that is the same. It will be diminished, which is expected for this cycle. Every cycle you get less volatility. So that is one interesting, and I really want to overlap that situation now with a spread chart. I cover this chart and 3 more charts that are also spread charts in this video. We are not ready. That is also a must watch at these times in the market. We do spread charts against the dollar index, volatility index, Federal Reserve balance sheet, and the Nasdaq. And I just want to touch base with the Nasdaq because I put new lines in the previous cycle in here to show you that the angle of 30 degrees has been relevant not just in this cycle for the spread chart, but also for the previous cycle. You can tell that the highs prior to the COVID crash with a 30 angle degree also coincide with the first stop. Then the first stop in here coincides with that. And all I'm doing is I'm copying these lines, retaining the same angle, and they match everywhere. It's just crazy. And the reason I'm showing you this is because there is a scary move that I will really like us to prevent at this point in time. Stick with me. This is 1, this is 2, and this is 3, okay? This is our 1, 2, and this is our 3. Now, notice one thing. In this cycle, 1, 2, and 3, 1 and 2 touch the top, 3 doesn't. And then it shifts one way down and it loses the support of the bull market. That support was tested 1, 2, and on the third, it got broken. Okay, let's go to the next cycle. We have 1, 2, and 3, and we have 2 tests of support. The first one in October 2023, September 2024, and we are right here. So if we were to repeat this performance from here, and that is why I really want to prevent this. We are at critical support there, although we could argue that we have already lost the support. It all depends on how flexible you are with drawing your levels. So if we were to repeat this performance, then the price will do something like this at this point in time and then rally in this manner into the resistance before heading into bear market. So if now we go back into the Fibonacci levels, that is 63K that we talked about before, and I think now is actually more or less 63, 62. If we enter this area, we will be more or less at those levels in the price. Remember, this is a spread chart, so don't look at that 3.5 there. That's just the ratio between Bitcoin versus Nasdaq. So if we go into here, that level there is more or less around the 60s, and it will pretty much repeat this box that you have in here before going to this level into resistance and then coming back down. The only reason why I remain reluctant towards this particular scenario is because I really don't feel like this was a euphoric top, neither there has been an altcoin season. So I tend to believe that if we have a strong correction in this area with liquidity starting to build up, as long as that liquidity really goes into that direction, I find it very low likely that price is just going to crash with liquidity increasing. In which case we could find support at the last line in the sand in here instead of below this line, therefore preventing to have this period where you're just hitting resistance and then crashing into a bear market, and instead doing something on the top end above support for another push up. Just speculation in here. All right, enough of long-term alpha, and let's look into the 4-hour daily time frame. Let's also look into the liquidation levels, fair value gaps, and all of that to understand what are we dealing with through this whole week. By the way, I published an earlier video with a setup, and at the moment that last line of support could be getting tested very soon. So make sure that you don't miss that setup if you are interested in the very short-term kind of price action. 4-hour, you can see that it hit the resistance at around the 40s, 42, 41. And on the 4-hour, what I'm looking for is if we can build in here some sort of double bottom formation. At the moment, we don't have that. We only have a test of the resistance. We still print lower lows and lower highs. The last line in the sand is this level that we test at 78. And we know that we have plenty of liquidity below this line, CME gap, so there is a chance that we go there. The only reason this morning I talk about a potential long is because too many shorts are eyeing that target. So pretty much on Twitter, everybody's talking about that target or even lower targets, and that makes them get very greedy, put a lot of risk at the highs, and even if you just rally into resistance, they lose it all, and then the price continues lower. That's why that setup can be seen as a long, but it can also be seen as a short if price goes too overextended to the upside in this climate of high fears. On the daily, we also have some structural levels that I want to review with you guys. Look at the price action in here. We lost the triangle over the weekend. You can see that the breakdown was on Friday. I published an update on this, and this just carry on. It took the lows. This is actually the lowest closing price was at 84,200. We tested that. We reclaimed the triangle, but then on Sunday, that level got broken. So far today, all we are doing is coming to the scene of the crime at 84,200. That's the analysis on the daily. The setup that I covered earlier is to just go and give another kiss goodbye to the bottom of the trading range we've been in all this area. So it's a quite risky one, and it doesn't necessarily need to play out, but so far we have come back inside it 1-2 times. So if we just continue with this trend line in here of resistance, there is a confluence there, and that's what I'm eyeing. But for that, we need to break certain levels of resistance that I share in the video. That 84.2 confirmed as resistance is the perfect recipe then to start taking the liquidity below 80s. You can tell that on the daily, the RSI has rejected. We went to 92.5, and I talk about testing that resistance and potentially going lower. At the moment, we could be in the process of defining a higher low pivot on the daily, at least relative to 24. At the moment, we are at 36. So eventually, I want to see what's going to be the battle in here before we exit from here, and then we start calling for an actual daily breakout to the upside. On the weekly time frame, this candle gave hopes to everybody, but that candle, unfortunately, it was just thanks to Trump tweeting on a Sunday about the strategic reserve. And I mentioned in my video that I don't like the reason to reclaim support because it's just so weak as a reason. It's got an 100% performance in faking out. Therefore, why will we believe this thing that we are not just going to come back from where we came from? And last week we ended up printing the biggest red candle on a weekly time frame for the whole history of Bitcoin thanks to that. So you see what I mean. So far, though we have hold this level is just literally the target of the double top, the technical target, and you can see we hit it once. On Sunday we close above that support, and so far we are above that support. It's also coinciding with the first largest green candle in here, so you have some sort of symmetrical thing in here going on with a large green candle on one side and then a large red candle on the other side. And it's very difficult now to believe that after having had this huge red candle, we're not gonna flip and then maybe have these two candles placed in here and continue to go and test the low 70s. Unfortunately, the bad news don't stop there, because on the weekly time frame, on the RSI, you can see that this time we couldn't hold the 49, and unfortunately we went to the next level of support. Let's zoom in here. You can see that that is precisely my 45 in here, 45 in 2nd of September, and third time 45 again. But now we are coming to 45 after having lost two levels of extremely important support. So if we had a rally, now instead of talking about a rally into 76, now we are talking about a rally into pretty much 49 or 50s. At that point, we really need to observe if we can actually reclaim support. And I'm gonna give you here an alpha that probably just by seeing this, I'm sure you're not being able to see it. I'm just so psychopath with the RSI that at the moment I can immediately see it. You can tell that we have two levels of support that are ascending, sloping support. The first one was the one that I used to call the boss. That is the boss. We lost it in here. And the second one is this new one that I introduced, I think, last week, and is connecting this pivot there. So the hopium that I have for you today, prepared with all the love, is that once you lose a level that is of extreme significance, for example, on 17th of June, losing this level, you can tell that we come back to the scene of the crime, we see a rejection, put a new low, and then still reclaim it in here, going into almost 80. This is the perfect hopium, because if we were to repeat that performance after having lost this level, then I should say that there is a chance that we go to the scene of the crime at 50, then potentially we test this level, and then we still have some sort of rally into the 60s. And that, I think, is one way it could be looking things for that additional liquidity coming into the market. And you might be thinking, yeah, but it's not worth anymore waiting for a 63. It is not the number of the RSI what matters, it is the distance that you travel what matters. So if you go from 44 to 63, that is around a trip of 20 on a weekly basis of RSI. At 20, move up from where we are. Let's imagine, let's just do the calculation from 45 to use the reverse RSI. So from 46 plus 20 to get into 66. So let's go into the price action. That will be equivalent to a move of the price from 84 to 112. So that is around 30K move up. And after that, you can continue moving up thanks to various divergences. So definitely worth not underestimating. Neither the fact that we could be producing on a weekly basis next Sunday a bullish cross on the stochastic RSI. Unfortunately, we couldn't confirm it last week. We ended up closing at the same K and D. You could implement a custom version of stochastic RSI to give you more significance digits or whatever it's called in English to see which one is above which one and confirm is a bearish cross, a bullish cross or not. But it's better to wait for next week and have a fully confirmed bullish cross. For example, at these prices, if we close, the blue line will be above the orange line and it will be already a bullish cross. If price collapses way more and it closes by next Sunday that low, of course, then we dodge again the bullish cross. I also left you some levels on the price. You can see in here I have 81K and I have 86.2K, and these levels are very important. They're coming straight from the analysis of RSI. Remember that 45 hasn't been broken in this bull market. Therefore, I believe that we should be defending the 45 and in the worst case scenario, go slightly below it, but reclaim it the week after. So pretty much in the context of a liquidity hand. So let's say it goes to 43 closing next Sunday, but the Sunday after we go back to 48 or higher. That will be the perfect liquidity hand. That is the only context that I can accept to go below 45. If we go to 45, we break it, we close there, the week after we close below that, then there is no way we can reclaim it. So that 45 at the moment is 81K, and reclaiming the ascending line that we currently lost and just having a rally into that as a resistance, which we say already was 49, but now I think it's like 50. So let's change that to 50. That is the green line and it's around 86. So if we go and we close this week beyond 486, then we are immediately reclaiming weekly support, and that is very bullish. We are in a red candle on the yearly. If you want to see my analysis on the CME gaps, look up for the earlier video. The monthly candles are definitely looking very ugly. After the shooting star, this fat red candle breaking support, and now starting March with a rally into 95, which is the resistance, and then getting rejected, it is definitely calling for a little bit more downside. With the price now at 80K, which I can see that the bullish setup never broke out from the morning and it's going straight for 80K once again. Possibly the general markets are doing bad, but as you can see, the monthly as well is breaking below the RSI support. We definitely need to recover above that level, otherwise we enter into the setup that we had in May in the last cycle, where we lost that support and we came as resistance. That will look something like this, and then a rally back into there. Remember that at this point that was an all-time high, so bear that in mind, that that is a possibility still, even if you lose the monthly support. Monthly support is right at the price where we are. 80K is monthly support. If we go to 70s and by the end of March we are back above 80, we reclaim monthly support. We are now below the short-term holder realized price, and that creates huge panic in the streets. Small wallets holders are all bleeding, seeing that all their profits are gone. Their average entry is now 92K, and we have already tested that as a resistance, and we are as low as, we've been multiple times this cycle. The short-term holder realized price hasn't acted really like a strong support. We are 11% down of drawdown in the total cumulative flows for Bitcoin spot ETFs. And on Friday, we saw again some red in here. We are in extreme fear at 20, and we haven't taken the lowest level, which is 10. So far, this is just holding 15, and now it's 20. So there is a divergence there. That divergence, of course, is destroyed if we take the previous low at 78K. Actually, it's the other way around. If we go, for example, now to 77K, which is a new low in the price, and we don't take the 10 off the fear going below that, then we get a bullish divergence against the sentiment. We continue to be in a warning buy that is going to be there until there is some signs that we have already recovered, which sometimes come too late, but we are in that window that says it's better to enter. You can tell that when we enter in a bear market in the past cycle, we got a warning buy at 50 and a warning buy at 36. With that average, you had just enough average to exit at 48 before the bear market. So far, we have just one warning buy that print at 96K. long-term holders are selling but at a very slow pace. For example, in here, price was going higher and they were selling a lot faster. They tend not to sell with the price going lower very frequently. So I think there must be some of them selling, thinking, okay, this is it, and some of them still holding. This is the actual setup, and luckily for me, it didn't break out, so there was no entry in here for the longs. I'm glad, because if this will have done the liquidity hunt scenario, that will mean that many people will have entered there with my setup and then get dumped. This just didn't have the strength to go for those shorts, which are currently in a larger profit. Let's look at liquidity levels in the longer term. We have at the moment the leftover of the CME gap at 77.5, and then we have the 68 that ends at 67. That is number 3. Number 1, we already took it. Number 2, we could say we have half of it, just the leftover. Ideally, we don't have to go to these lows. This belongs to the previous bear market. I don't think it's impossible to get there in a bear market, but my finger in the air at the moment, ignoring all the technicals, makes me believe that in a bull market, we can go to number 3 and then have some dead cat bounce with decent upside, full around all 2025, and then once we enter to actual bear market, then take below 50s. Alright, let's start with the order book surgery. You can see that there was a signal to buy at around 80.7 because the bidding activity reached around 22. As soon as price went into 84, which was the resistance of the breakout area that we talked about, they started aggressively selling again, and the price is due now for a new low. We got the global longs at the highest levels. We recently have negative funding raise and extreme fear. So all of that, it's saying that eventually we should be seeing a new local bottom information. Now the thing is that it's very difficult with these signals to bottom while at the same time having so much liquidity on this lower end. It makes it just too easy for too many shorts to say, let's just go and hit that level. Let's take it out of the way. It's just such a low hanging fruit. Why not? I was just hoping that they break out from that resistance and then they get trapped. It happens very frequently, and I think it was totally worth keeping an eye for it. At the moment, the delta is around 400k difference, putting the shorts at higher risk. I'm surprised that this is not a lot more. I would have liked to see in here something like 1 million in shorts risking liquidation, and I'm pretty sure that if we would have had that this morning, it would have made it much more likely to do such breakout to the upside. Let's have a look at the order book on FAR charts. You can see that there is tons of resistance. At the moment, the highest level of resistance is at 94k. Let's go into the monthly. They just had a level of resistance at 92 and they pull it out on this move up, which makes me want to wonder, is this really done or are we still gonna hit that level? The 94 has 54 million, the 91 has 87 million that they wanted to short around there. You can tell that as the price went up, they pull out the 92. Very interesting move. We continue to have liquidations of longs and shorts at the same green band in here, which is a great signal by itself. You get beyond the green and you start buying like crazy during the liquidation event, and you get very, very pronounced moves to the upside. This one wasn't that big, but this one in here offered 21% upside. The most recent one was when we went to 80k. At that point, we also liquidated a similar amount of longs and it moved up only 4%. So maybe if we get now into the liquidity and we get another second liquidation, that could be another bottom formation, just like in this setup, where you get an early entry and then a second one, and the second one is the winner. Let's see how is support below the price. We got 72.5 and then the 70 and 69k located at the previous all-time high. Price is accelerating into 80k. Let's see if this time it's gonna take it. Fair value gaps. Well, we have the overlapping area with the CME gap. We just took 82. That one is gone. And to the upside, we have the ones that were supporting as well my thesis of the breakout to the upside before being able to take 80k. As I'm recording, we are about to pinch 80k, so I don't know yet if we can still go and take these two greens or if we are gonna leave them behind. General markets, big tech are all in red, so that is what is at the moment really helping with that potential downside. Alright guys, I'm gonna cut it in here because I have a video with 1 hour of content that needs to be edited that I want to push out to you guys. I hope you appreciate all the alpha, all the insights. I know that you really want me to say I know the future, I know everything, I have a crystal ball. I do not have it. I think we're gonna get some surprise in 2025 that's gonna be bullish and it's gonna leave a lot of people really disappointed. As you can see, we are at the moment pinching that 79. Pretty cool. I wanna concentrate and maybe take a trade today. If you appreciate the content, hit the like, subscribe, and write down a comment down below. That always helps. And if you want to trade Bitcoin, consider using one of the links in the description. On OKX, you can claim up to 60,000 in rewards and reduce your fees to the minimum. That's only by using the link in the description. And if you want to stay non-KYC, I have two options, BitUnix and Bluffing. Either of them giving great rewards. BitUnix is the best one if you want to do a small deposit, because whichever deposit or trading volume you get compensated still. Thanks so much. I'll see you in the next one. Take care. Bye bye.